Before we look at some interesting swing setups, we want to start with taking a look at the stock we ended last week's video with, QTEX. This one played out perfectly. We told you about the $1 level for a potential entry. Monday, it immediately opened above $1, so we got in. As long as Quantum wouldn't die, you could play it. Quantum never died. It never lost the dollar level, so we kept riding. It even gave multiple breakout setups on the way up to enter in case you weren't in yet. The first breakout zone was being formed when the $1.53 to $1.60 area acted as strong resistance. It rejected 4 times from this area, and even rejected a 5th time at the end of the day. At the strong breakout candle, you could have entered Wednesday. The second breakout zone for a possible entry was the $2.30 zone. It started rejecting a few times around this zone, but the real conviction came the next day. When it broke the zone, it made a nice move, but when it came back afterwards, it consolidated right at the zone. The resistance has now become support, so a great entry level to enter QTEX. It kept going the whole week to almost $5, which is a more than 300% move from the first entry level, almost 200% from the second entry, and even more than 100% from the third entry. Even if you miss one entry level, you don't need to chase. There will always be a new opportunity. The other insane play this week was ASTC. This one started running massively Wednesday. We missed our $8 breakout, which we liked because it rejected strong from it a couple of months ago, combined with the strong rejection from it in pre-market. But like we just said, there will always be another opportunity. So we didn't chase and kept it on watch, even after its move to almost $20. We marked its high of the day, $19.75. After its consolidation phase, it came back up and rejected the high of the day level again. A few minutes later, it broke it strongly. When it even retested it nicely, we got in. This has now proven to be a really strong level. It gave us an almost 30% move. When it came back down, it bounced from the level again, so we entered again. It gave us a nice 15% move. After market open, it did it again, so we repeated the same strategy, this time a nice 10% profit. When it finally broke the strong level, we closed our last shares, but because of the moves it made already, we were already really green. When it broke the level and went down, it didn't die. It started consolidating again and going back up to the level. It rejected the level again. This meant that the level was still strong even though it broke it. So, when it broke the level strongly again, we entered. This time it went explosive and gave us a 100% move. Do you see how we still caught multiple moves, including a 100% move, even though we missed the first move completely? Because the market is really hot and we expect it to be for the rest of this year, we also want to take a look at some stocks for the longer term. For these stocks, we don't use the 1-minute chart, but the weekly chart. Important to remember is that we're not buying these stocks for a few hours or a few days, but for weeks or months, sometimes even years. We don't stress about these stocks, and most of the time only look at them once a week. These stocks can pay you some nice extra money without looking at them. Let's start with IOVA. We talked about IOVA in one of our first videos. Since that video, this stock has made us more than 100%. And we think it's not over yet. It broke the downtrend and is now starting to form an uptrend. Interesting is the volume that has come in since last year. These volume spikes can suggest some big loading for a possible explosive move to the upside. We think this one can go to $7 plus once it breaks the high it formed a few months back, and maybe even go to double digits. We will add dips at low 3s if it goes down. As long as it holds this trend line, it's really strong. And even if it loses it, it's still fine as long as it holds this one. The second we want to talk about is OSCR. This one we treat a bit different because it is more of a breakout setup. Since its existence, this area has been really strong. Firstly, it bounced from this zone before it dumped hard when it broke it to the downside. Since that moment, it has never reclaimed it. These last years, it tested it multiple times, but without any success. So, we will enter if it breaks this zone. It could get aggressive after the breakout and fly all the way to a new all-time high. The third and final one for this video is MRLN. This one is the most risky of the three because it has the least amount of data. This also means that its price might not be right at this moment, so this one can really explode or really dump. Because you don't have a lot of candles on the weekly, with this one, you could also use the daily chart. There is not much so far on this one. The only interesting thing is it has a really pretty double bottom. This level can we use as a risk level. We can put our stop loss below this level. On the weekly chart, this double bottom level looks more like a quadruple bottom zone, so even stronger. So for Merlin, there are two entry possibilities. Or you enter small now and risk 30% for a possible big move, or you wait for the stock to come back down to the zone to enter and risk less than 10%. Keep these three tickers on watch. These are a few of the stocks we're watching for the longer term. Most of the stocks we're watching are already up much, so it's really tricky to enter because the risk is relatively really big. But like we said, always stay patient. There will always be a next play. I hope you learned something, and I hope this video helped you further in your trading career. Keep your eyes open. It's gotta be a hot summer. See you, hopefully next time. Bye.